In this part, I'm using a question to review what we learned in this chapter, especially accounts receivable valuation and reporting. This question is also available in the Chapter 7 folder. You can download. The information we are given is the ending balance by 2016, or it is beginning balance of 2017. We are given the balance of note receivable, interest receivable, the net realizable value of accounts receivable, 1,324,000, which is the difference between accounts receivable and the control accounts, allowance for doubtful account. So total balance of receivable is the sum of the three. Question 1. The firm made a sale 10,500,000 and all sales were credit sales. Okay, so that's important, credit sales. Young allows some discounts for early payments of receivables. That means cash discount is available. Use a gross methods to record the sales. We know to record the cash discount, the gross method and net methods are different. So here, it asks us to use gross methods. The first one is very simple. We just recognize the credit sale. So the journal entry for the credit sale is we debit accounts receivable and credit sales revenue. Okay, so if it is cash sale, we know we are going to debit cash, right? But here, the $10,500,000 are all credit sales. That's it. Number 2, customer accounts of 89,250 was written off during the year. Okay, so this is a write-off journal entry. This question implies one customer was not able to pay this amount. So the firm has to write off this amount from their accounts receivable balance. We also know the journal entry for the write-off is debit allowance for doubtful accounts and credit accounts receivable. Question 3. Accounts receivable of 10,600 were collected. Collection for the year including 300,000 accounts on which 1% sales discount were allowed. So that means we should account for the sales discount or cash discount. Don't forget we need to use gross method. So we debit cash receipts, which is after sales discount, and the credit sales discount, which is the 1% of $300,000. So the accounts receivable we credit is $10,600,000. So we apply the sales discount, right? So this is gross methods. Remember, for the net methods, we do not recognize sales discount. We just apply the sales discount forfeit at the end of each accounting cycle. Number 4, 120,000 was received in payment of an account which was written off the books as worthless in 2016. That means $12,000 was written off last year. But now, the client make the payments. So we need to reverse the write-off journal entry and debit cash and credit accounts receivable. Okay, so this is debit accounts receivable and credit allowance for doubtful accounts. Remember, the write-off journal entry is with debit allowance for doubtful accounts and credit accounts receivable. So the collection from the accounts receivable which was written off, we first make the reverse journal entry and the debit cash and the credit accounts receivable, which is same as the example in the PowerPoint. Okay, number 5. At the year end, okay, 2017, And the firm estimate the allowance for doubtful accounts balance is 76,000. Okay, so yeah, in this question we don't need to calculate by using the aging methods. We actually are given the results, which is ending balance of allowance for doubtful account. Because there are several transactions have impact on the allowance for doubtful accounts. Before we calculate the bad debt expense or the adjustment, we need to update the balance of allowance for doubtful account first. So here, this is a T account. And 81,000, which was given, provided. Credit balance, okay? The next one is, yeah, see here, we debit allowance for doubtful accounts, okay? So debit. The next one is we credit 12,000 here. All the transaction impacts the allowance for doubtful accounts before the number 5. We learned the ending balance is 76,000, so we can calculate adjustment is 72,250. Okay, so we are going to debit bad debt expense and allowance for doubtful accounts. Actually, after this journal entry, the ending balance of allowance for doubtful accounts will be 76,000. Number 6, the note receivable and the related interest were due January 1st, 2017. Young collect both in full on that date. Yeah, actually, the balance of both are given. This is balance by the end of 2016. And they are going to be collected fully just one day after. So collection of receivables, basically we just debit cash and credit the receivables. Okay, so I should move this to here. This is debit, this is credit.